All right, here we go. So, yesterday, the big meeting, the Fed meeting, and Powell's comments. And yesterday, stocks liked Powell's comments because the S&P 500 and Nasdaq soared and had their best day since February. But this morning, there are some worries about the U.S. economy, and stocks are reversing yesterday's gains. And we'll take a look at this and what's happening. We also had quite a few trades according to the WTF strategy, and even looked at some real opportunities. So we'll talk about all this. And with that said, welcome to Coffee with Markus and Morgan. Today is Thursday, August 1st, a new month. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And wow, Mark, yesterday, the indices had their best day, especially the S&P 500 and the Nasdaq. Today, already a different story.
Yeah, bipolar markets for sure. I mean, this is where early on in the week we were back and forth, and the focus, of course, has been on earnings, but now it turns to jobs, and then there's the Fed and what they have to say. And yesterday it was up, and away. We gapped higher, we were rallying and staying strong even after the Fed's comments.
Yeah, so yesterday, the AI rally was back in swing yesterday because if you look at it, we had Nvidia yesterday gaining what 12% or something like this. It was insane. Nvidia up and away after AMD reported better than expected earnings, and AMD opened higher but then pulled back, still higher by what 5% or something like this. And yeah, this is where things got interesting in the afternoon because the Fed had its meeting, let us know that they will keep interest rates the same. So this is where they also changed some wording in the statement. And at first, market got a boost, then moving a little bit lower, and then just fiddling out into the close, kind of finishing where they were right before the Fed statement.
Yeah, no, this is where there really wasn't anything that was unexpected, right? Because everybody expected that rates would stay the same, which the Fed decided to do. And the Fed funds futures were pointing towards a rate cut in September. And basically, Powell said that, hey, with the data that we've seen, they have additional confidence in the direction things are headed. And September cuts on the table.
Yeah, and it was interesting. I watched the press conference, and so pretty much people asked, "Okay, are you going to cut rates in September?" And Paul said, "Well, with the data and it all looks good. So, are you going to cut rates in September?" Well, we are leaning towards. We think it might be appropriate. So, are you going to cut rates? And so, I mean, he tried to tell everybody, "Listen, we have two more sets of data coming in. However." Q1, the first quarter, was kind of a disaster in terms of progress towards inflation because we were actually ticking up. The second quarter, he said, well, we made some progress and we are happy with that. And we have two more data points coming out. So we will have the inflation data for July and the inflation data for August before the next meeting because the next meeting is in 48 days. So that's kind of good. Anyhow, he also stressed and said, well, listen, guys, you do know that we actually have a dual mandate. So we are, yes, making sure that inflation is getting under control. And under control means for us around the 2% level. And we want to have maximum employment. And he said, you know what? For the past few years, we were focused here really on inflation. And now we need to keep an eye on the jobs market as well. Where previously he said, you know what, we need to get inflation under control. And I don't care about the jobs market. I'm willing to drive unemployment up to 4.3% or 4.5%. And we know that unemployment has moved higher. And tomorrow we do have the big report. And unemployment right now is at 4.1%, up from 3.4% that we had before the Fed started raising rates.
Yeah, this is going to be interesting. It's always a big report. The monthly jobs report's always something that investors keep a close eye on. And there's that average hourly earnings, non-farm employment numbers, and the unemployment rate there. But I think that right now you kind of have this teeter-totter between optimism with a Fed cut and concerns about a recession, right? I mean, we don't need to go full recession, but that I think is where we're seeing a little more volatility now because uh, with the Fed cutting, are they cutting because they can, or are they cutting because they're concerned about the economy? And that's where that dual mandate and maximum employment comes into play.
Right. And we saw this morning we had reports. So unemployment claims came in higher than expected. So that's not necessarily what the Fed wants to see, right? So we see this. Plus, we also had the ISM manufacturing PMI coming in worse than expected, basically saying, hey, the economy is slowing down. And now the question is, okay, is it slowing down, or is this where it's coming through to a screeching halt?
Yep. Yep. So leading to a little volatility, and where yesterday the semiconductor ETF saw its best day since 2023. Now semis are right back down. Go figure.
Yeah. And if you look at the 5-minute chart of the S&P this morning, it first was, hey, up and away. And now it is like, holy cannoli. I mean,
Yeah,
the S&P is down 0.8%. The Dow is down 0.1%. The Nasdaq is down 1%. The Russell is down 2.7%. And we are
do
trading
that.
at session lows and the markets are still falling.
Yeah, quite a move from yesterday's highs to where we're at right now.
Yeah. And just like this, looking at the daily chart of the S&P, we are stuck right between the 5,500 level and the 50-day moving average, right now trading at 5,482, just shy of the 5,500. So we are right back in the range where we were trapped for the past, I want to say, almost couple of weeks.
Yeah, so I mean, this is where there's that moving average that has been support, and will we get back down there? I mean, just right now, it's anybody's guess. Do you think we're headed to a bigger sell off and possible correction, Marcus, or do you think that right now this is just noise?
Well, you see, this where it's interesting because I'm also keeping an eye on the 2-year versus the 10-year yield, right? So this where if you look at this, whenever this moved below zero, this is where it means that short-term rates are higher than long-term rate, and this is the so-called inverted yield curve, right? And we said,
Yeah.
okay, whenever there's an inverted yield curve, there is the possibility of a recession. And we did below this. And I kept an eye on it over the last few days because, as you can see, we were getting awfully close to going above zero again. So we had a really nice trend where we saw, okay, the longer term yields are actually moving up, the shorter term yields moving down, so that we moved above the 0%, which kind of means that now traders, investors are no longer expecting a recession. Over the past few days, we have moved down from minus 0.1 to minus 0.2. And we see that we have been basically between 0.15 and zero point 0.4 for quite a while. So is this just noise? I think tomorrow's unemployment report will tell us how bad it really is, because expected is that, yes, the average hourly earnings stays the same, the unemployment rate stays the same, the non-farm employment change goes down a little bit, and if tomorrow we see an uptick in the employment rate to maybe 4.2%, this is where I think we can see a little bit more of a retracement here, because this means that, yeah, the jobs market is weakening, and maybe the Fed might have waited a little bit too long with cutting rates, and we'll see.
I like that assessment.
There you go. All right. Now, one thing, Meta reported earnings, and look at this. It was up and away for Meta. Right now, pulling back, but still up 6% because Meta reported better than expected earnings. And Meta was very closely watched because it's another one of the Magnificent Seven and reporting better than expected earnings. So we now have what? We have Google, and it was like, nah, not good. We had Microsoft, and it was like, nah, not good. We had Tesla, and was, nah, not good. And now we had Meta, and Meta finally, yay.
Yeah, and I mean, this is where you have the top and bottom numbers, the earnings per share and the revenue. They beat on both, but then they also issued better than expected forecasts for the current period. So investors liking that. And like you said, although we're retracing a little bit from where we opened, still a 6% gain is a nice move.
Yeah, and this we're also looking ahead at the economic calendar. Let's just zoom out here a little bit. Not at the economic calendar, at the earnings analysis. Tomorrow, today after the bell, we have Apple and Amazon reporting earnings. And this is where we know that the AI boom has basically saved us from a recession. I mean, I'm convinced without the AI boom, we would have gone into a recession. And the AI boom just happened at the right time. And now the question is, okay, is this AI boom over? And based on what we heard from Google and based on what we heard from Microsoft, it might be. AMD said, no, we are still in full swing. This is why semiconductors had a fantastic day yesterday. And now we want to know Amazon and their cloud based business. What do they say? And how does Apple see AI? And what's happening with AI and Apple products? And we know that this could be a huge boost because, I mean, Apple products are everywhere.
Yeah, this is definitely one to watch. And so the dust has not settled yet. There's more on the table. We mentioned it earlier this week. It's sure it's a Fed week, but that's not it. Jobs and earnings are still in the spotlight. So we'll have to see.
And we'll see after this week, earnings will wind down again. We see that still 83 stocks reporting earnings, but I mean, it's fizzling out. So next week, I believe that next week, is it already the week where Nvidia is reporting earnings? No, not even yet. Not next week. So next week, we are back to Dow components like CVS, Caterpillar, Walt Disney, Eli Lilly, Gilead. And then it's in 3 weeks from now? When is Nvidia reporting earnings?
Nvidia, they have a strange one.
Pretty late, it
August
seems.
28th. Yeah, August 28th.
Anyhow, so let's talk about our trades. And let's see. On the WTF analyzer, we had a bunch of exits. Pretty much exited all of our trades except one. Honeywell is still open. All the other were exits. Honeywell this morning did quite well. We're moving higher right now with the overall market also down 1%, trading right around our entry price. So we entered at 203.03. Right now trading just a few cents shy of that. So we'll see. Most probably we'll have an exit signal for Honeywell tomorrow. So got out of a lot of positions today and two new trades. Bank of America and Walmart.
Yeah. Look at that. Bank of America popping up on the list after that pullback and an extreme oversold condition where the scanner identified an opportunity to buy. And I took this one.
Yep, same here. I took this one. So we entered at 40.44 and right now trading at 39.44. So $2 below our entry. So Bank of America also showing weakness with the overall market down 2%. Walmart, on the other hand, Walmart, we entered this one this morning. Let me just see until I get my data here. Let me wait a second and maybe refresh the screen. It seems that this morning a little bit lower here. There we go. Walmart, nicely bucking the trend today, up for the day. Also, oversold conditions, we bought it at 68.91, and right now we are just up a few cents. So we'll see what happens with these two.
Looking good, though.
Looking good. All right, talking about wheel trades. And first up, CSIQ. CSIQ really started off strong this morning, right now pulling back with the overall market. And I just want to see that our beautiful trend line stays intact here. So we need to stay above 16 and hopefully go back towards 17. And again, we are in this wedge here. So we want to break above 18. Let's see what happens today when the dust settles. If later this afternoon, some investors and traders see this as a buying opportunity, or if everybody is waiting for the jobs report tomorrow.
Yeah, and this I was hoping for more upside after the yields began to drop, and they're dropping nicely, which is a good thing. But it does look like this is just a move in reaction to the overall market being down.
Yeah. Halliburton being all over the place and today being down 3.8%. And I mean, this is an interesting one because this is where we got a sign at 34.50. We're able to sell calls against our positions a few times. You have sold calls against the 34.50, right?
I have, and I actually closed those a little bit before we started this video at 90% of the max profit. So I sold those last week for 40 cents, bought them back for 4 cents today.
Man, I mean, you already have been double dipping last week and a possible double dip this week again. Nice.
Yeah, I would love this to be a little bit of an overreaction and rally tomorrow. Then I could sell calls again.
Yeah, that'll be great. Colds also, after having a phenomenal day yesterday, and I was able to sell puts calls against my existing position at 21.50 as well as 23. This morning, it seems that I'll be able to close my 23 calls also at 90% of max profits. So this where I sold them for $15, so I would have to close them for 1.5 cents. I right now have an order in to close it for 1 cent, but I'm willing to close them for 2 cents, and then just wait and maybe do the same that you did with Halliburton, sell them again. But this is fun to trade. These are fun.
Yeah, it works.
And then we have our little buddy UPS here at UPS. After having a great morning at first, rallying off the gate and going as high as 132.50, now pulling back a little bit with the overall market, still up for the day, liking that. So come on, buddy. It is time for you to start filling this gap. Go ahead. And this is what we call a gap fill, and this is the direction we want you to go. But good to see it up today.
Yeah, always nice if it's bucking the overall trend.
Yeah. All right. And then you were actually looking at another possible wheel trade.
Yes, BP.
BP. I mean, this is just beautifully falling. And I think you sold the 34.50, right?
Yep, I sold 34.50s for next Friday, and like this one as an opportunity. So pulling back, but super strong support there around 34.
Yeah, especially if we zoom out a little bit, we just see that we have beautiful support at 34. So I did not take this one. You took this one because I already have quite a few positions here and decided not to take this one. All right, anyhow. So lots going on here, as you can see. Now, are the markets still falling or have they found a bottom? We'll take a look at this in just a moment. And it is the time in the show where we tell you some really bad dad jokes. And let's see what we got for you today before we start looking at the markets again.
No, I think this is the perfect joke considering that it's a dad joke.
All right.
What's the difference between government bonds and men?
Oh, dear Lord. I don't know.
Government bonds mature. I have to give a little credit to Brian for this one. He messaged me in our community and shared that one. So I cheated a little bit.
All right. So I want for you today, if you do still have a 9-to-5 job and think that you have a bad day and you feel kind of useless at your job, keep in mind that there are lifeguards at the Olympics. Sorry.
Good point. Yeah.
Had
Yeah.
to show this one. All right, let's
Yeah.
go back to the markets and let's see what's happening here. So we're bringing up a 5-minute chart of the S&P, and we want to see where are we. It seems that right now, after the initial slide, we are still trading at lows of the day, but for the past 10 minutes, it has bottomed out. The Dow is still making new lows. The Dow now down 1.1%, the S&P 0.7%. Nasdaq also seems that we might have found a bottom here right now, and the Russell still falling like the Dow. The VIX up this morning, 6.6%. The fear index trading at 17.5, 17.48. So interesting. Tomorrow will be the day, I think. Tomorrow will be the day where either the S&P can break above the 5,500 again, or we might actually move below the 50-day moving average, and then the next support level would be 5,400.
And that isn't too far away.
It's right there. So, I mean, you don't want to miss tomorrow's show. And